Thank you very much, and hi to everyone here. So we're here to talk a little bit about Lending Block, but I thought I would give you a little bit of a personal journey which has led me to this point. So my background is purely within financial services. I spent 15 years working in capital markets, in technology for investment banks. I then moved into management consulting, so I was a Deloitte partner doing financial services advisory for, again, for banks. And as part of that process, a few years ago, we started to look at what were the threats and opportunities that blockchain posed or presented to financial markets and in capital markets in particular. And at that point, I got tired of sitting on the sidelines, and now I'm realizing I don't have the clicker. I decided to be, there we go, great, thanks. I decided to get off the sidelines and jump into blockchain. So as you might expect, what I'm doing is looking at the growth of the asset class, and in particular, what is the maturity of the financial services that allow people to access that asset class in the same way that they would do with stocks or with bonds or commodities or derivatives. So just to put it into perspective, current market cap, last time I checked, this slide might be a couple of days out of date, it's about $500 billion. And to put that next to the scale of conventional debt and equity securities, it's about 1/30th, so 15 trillion to 500 billion. Our premise is that the supporting services that you need to be able to interact and to utilize an asset class, so exchanges, payment systems integration, as we just heard about, or the ability to be able to finance, do financing and hedging, is obviously mature and has been around for a long time in conventional capital markets, but really doesn't exist in any form of maturity within crypto. So anybody here who's used an exchange, and I assume that many of us have, will find that those are less than perfect. But when it comes to payment systems integration, it's essentially non-existent when you come to the ability to be able to lend and borrow crypto assets. Again, doesn't really exist. And our view is that for the asset class to reach its full potential, these services need to catch up with the growth of the asset class. And this 500 billion number is a number that we think is going to grow massively, and it's not going to come primarily through new projects. It is, I think, going to come through the migration of conventional securities to digital form. So whether that's security tokens on platforms like Polymath or T0, or whether it's the issuance of debt securities that we heard about earlier this morning, I think we're going to see a real migration of securitized or of other forms of securities towards a crypto base. And as that starts to happen, and as more and more investors want to get into it, we're needing to see institutional grade services, exchanges, borrowing and lending come into play. So that's really what we're about. We're particularly focused on this third wave of financial services. So what is Lending Block? We are an exchange for borrowing and lending crypto assets. So if you're familiar with securities lending in capital markets, where a borrower puts forward one security as a collateral and borrows another, we're trying to create the same sort of capability, but for crypto assets. And this is a marketplace where in debt securities and equity securities, at any one point in time, there's about $2 trillion worth of equities and bonds on loan or used as collateral. And if we were to scale that towards the crypto marketplace, this is really something which should be generating hundreds of millions of dollars in revenue, probably about $300 million in revenue if we were looking at that 500 billion crypto market scale. So Lending Block, we're basically trying to recreate in a better way securities lending, but for the crypto economy. So what that will allow people to do is anybody who holds a digital asset, whether you're a fund or whether you're a small-term investor, a small investor, and you have an asset that you want to hold for a longer time, we will enable you to put that into a lending market and to earn passive income, so you basically be able to enhance the yield. So that's easy to understand the benefits of. Borrowing digital assets, the other side of the exchange, it's more of an institutional focus. So this is for funds who have active trading strategies, for investors who are looking for working capital, for market makers or people who are trying to execute sort of long-short relative value arbitrage. So these are things which obviously exist outside of the crypto world. We're the first firm to bring these to bear in the crypto economy. So to do that, we're basically trying to achieve a couple of things. We want this to be a simple and transparent process. So we want our exchange to work in a way where there is complete transparency about order books on both the borrowing and lending side. It's possible to do price discovery, and we want to make sure that everybody who's accessing the market is treated fairly. So we base our matching algorithmically on the best rate available and the first date. So the best, the first person to offer the best deal is the one who is matched. But obviously as well, safety and security is absolutely paramount. So it's why we're here in Gibraltar. We will become a regulated business under the DLT framework, and we also obviously put a lot of emphasis on the security of the collateral and the principal, and there is a process for managing the collateral, doing margin calls, which protects lenders as well. So the two components of what we do, I've spoken a little bit already about the exchange, so the borrowing and lending exchange. The second half of what we do is the operational processes that happen after a loan has been formed between a borrower and one or more lenders. So we use smart contracts to codify and manage the execution of the lending agreement. That means that our smart contracts take care of the distribution of interest payments from borrower to lender. It runs the collateral management process, and it runs any default processing and the loan repayment. So two halves: the exchange and then the post-trade processing. So what is this? What does this look like? This is a sneak peek off our demo, which is complete. What you see is, for people who look at a trading app, you recognize that we have a yield curve here on the top left, showing borrow and lending offers. We have market depth, both borrowing and lending, at the bottom, and then we have the ability to be able to see open requests and match trades, and for people then to be able to go in and very simply execute a borrowing or a lending offer. This is very different than some of the other lending platforms, which are more about a credit-based application process. We're very clear that what we want to create is a market aimed at institutional users in particular, but also we know that if we make this strong enough for institutional users, that it will be available and suitable for individuals as well. So that's the presentation. Happy to take questions either here on stage or I'm around for the rest of the day and tomorrow as well. We're also out in room number 3.